All right, so I've spent my entire career as a commodities trader, and today I'm going to pull back the curtain on my world, the global oil market. It is a nonstop, seriously high stakes game that, believe it or not, affects every single one of us, often in ways you would never ever expect. So, let's dive in. This is the question, right? I get asked this constantly. What actually moves the price of oil? Is it, geopolitics, Wall Street, some secret cabal of producers making decisions behind closed doors? Well, the truth, it's a whole lot more complicated and honestly way more interesting than that. The short answer, everything. Literally everything. A hurricane brewing in the Gulf of Mexico, a single tweet from a world leader, a new economic report coming out of China, all of it. And my job, day in and day out, is to try and make sense of all that noise, and then place a bet. So my day doesn't kick off with some opening bell on a trading floor. No, it starts with just a fire hose of information. See, the global auction for oil, it never really sleeps. So the very first thing I have to do is figure out who's winning that constant tug of war between supply and demand. This right here, this is basically my morning dashboard. Think of each of these as a critical piece of a massive puzzle I have to put together, usually before I've even had my second cup of coffee. Are there tensions flaring up in the Strait of Hormuz? That's a huge piece. Did OPEC Plus just announce production cuts? That's another. Is a new economic forecast hinting that global growth, and therefore demand, is slowing down? That's a third. You see, I'm not just trading a number on a screen. I'm trading the world's story, and I've got to piece it all together every single morning. Okay, now to really get what I do, you have to understand that I live in two completely different worlds at the exact same time. There's the world of blinking screens and financial contracts, and then there's the world of actual physical oil sloshing around in super tankers crossing the ocean. And this is where things get really interesting, because these two worlds are like night and day. Over on the left, you've got what we call the paper market. This is what you see on the news. It's lightning fast, totally anonymous, all electronic. To be honest, a lot of it is just financial betting. But then, on the right, you have the physical market. This is old school. It's all about relationships, handshakes, direct deals, and real, actual barrels of oil. It's slower, it's way more complex, but it's where the rubber, or maybe I should say the crude, hits the road. And don't let the slower pace fool you. The physical world is absolutely enormous. Think about this. Roughly half, 50%, of all the crude oil pulled out of the ground has to cross an ocean just to get from the producer to a refinery. We're talking millions upon millions of barrels out on the water every single day. It's staggering. So the big question is, how do these two worlds, the paper and the physical, actually connect? Well, the best way I can explain it is to just walk you through a real deal. Let's say my phone rings, and I need to put a price on an actual cargo of crude. Okay, so here's the scenario. My client, a huge refinery over in Europe, they give me a call. They need their usual monthly shipment of Saudi Arabia Light that's a very specific type or grade of crude oil, and they need a price from me right now. And I can't just, pull a number out of thin air. It has to be directly linked to what's happening in the global market. So this is how we actually build the price. It's a simple three-step formula. First, step one, we grab the benchmark. This is the big public price that comes straight from that fast-paced paper market. Let's just say for argument's sake that Brent crude is trading at $85 a barrel. Okay, step two, we add something called the differential. This is the part we negotiate. It's an adjustment based on the specific oil's quality and how much people want it right now. In this case, it's a premium, so we add $1.50. So, step three, you just do the math. The final price for those real physical barrels comes out to $86.50. Simple as that. And that right there is the most important thing to understand. The futures market, the paper market, it sets the base price for pretty much everything. We're all anchored to that number. The only thing we're really doing in the physical world is haggling over that little bit extra on top. Okay, great. The deal's done. $86.50 a barrel, locked in. But my job is far from over. In fact, you could argue the most crucial part is just about to start. And that's managing the risk. I mean, just think about it for a second. That tanker is going to be at sea for 40 days before it reaches Europe. 40 days! In that time, the price of oil could absolutely crash. That $85 benchmark could plummet to $70. And if I haven't done anything to protect myself, my fantastic, profitable deal just turned into a catastrophic loss. So what do? How do I protect this thing? I go right back where we started, that anonymous, electronic, paper market. It's my secret weapon. For every single physical barrel of oil I just agreed to buy, I immediately sell one paper barrel, a futures contract, on the exchange. It's a move we call hedging. And just like that, I'm perfectly balanced. Now, if the price of oil tanks while that ship is at sea, sure, I'm losing money on the physical cargo. But, and this is the magic part, I'm making the exact same amount of money back on my paper trade. They cancel each other out perfectly. It's basically my insurance policy against a crazy volatile market. Okay, so a lot of talk about paper barrels and tankers. Why should you care about any of this? Well, because the prices that are being fought over on my screen, they have a very real, very direct impact on your wallet. Let's just take the price of gas at the pump. When you look at what makes up that price, yeah, you've got taxes, refining costs, distribution, all that stuff is in there. But look at that huge slice of the pie. The single biggest piece, almost half the cost you pay, is for the raw crude oil. And that's the price that gets set in the global game that I'm playing every single day. And it's so much bigger than just the gas station. The cost of your flight, that's jet fuel. The price of your groceries, well, that's linked to the diesel in the trucks that deliver them. Your heating bill, all of it is connected back to this market. The little ripples from my trading screen, they spread out and touch almost everything. So you see, the oil market is this incredibly complex web of finance, logistics, and geopolitics. It is, without a doubt, what powers our world today. But the future is changing, and it's changing fast. The whole energy transition is happening right now. We're seeing new markets pop up for things like carbon credits, for battery metals like lithium and cobalt, for renewable fuels. So it leaves me with one final question for you to chew on. As the world keeps changing, what do you think my next trade is going to be?